Simon Wood from Ausbil. Welcome to the Equities and Growth Assets Symposium.
Thank you, Drew. It's a pleasure to be here.
Could you expand on your unique opportunity set within global equities?
Well, we look at global small caps, which is about 4,300 companies in the smaller markets around the world. We think it's a great opportunity set. Companies between 500 million USD and 5 billion USD. We think the really sweet spot where you can find great quality companies expanding globally, launching new products that are going to deliver unrecognised earnings growth.
And what are some of the key benefits of holding global smalls in a broader equity allocation?
Well, global smalls have performed really well over the last 20, 30 years. They've outperformed global large caps by over 3% a year. So not material in a single year, but when you compound that over a long-term period, that really makes a difference to investors' outcomes. Lots of diversification, lots of companies to pick from.
And could you expand on the concept of companies graduating from your portfolio?
So we really think the aim when you're a small cap investor is to find those companies through their expansion plans, their geographic expansion, their new product sets, to take that growth and transition from small caps into the mid cap and the large cap indices. That's what we're really looking for, those high quality companies that are going to become the future niche leaders within their industry.
Concentration risk is a growing issue within global equity indices and strategies.
We've seen huge concentration risk over the last 10, 20 years. ETF flows have really sort of focused the S&P. The top 5 companies now are about 23% of the S&P 500 market cap, which is huge. So we see that concentration risk, but we see small caps offering a really diversification benefit, lots of great companies offering really interesting niche growth avenues.
And what are the key drivers of returns in that niche area?
Well, it's all about unrecognised earnings growth. So it's about finding companies that are niche leaders within their industry, expanding globally, launching new products that are going to deliver that unrecognised earnings growth. So sustainable earnings growth over time, but still at attractive valuations, still undiscovered versus the wider market.
Is there an informational asymmetry in smaller global small caps?
Absolutely. We've seen a really interesting phenomenon over the last few years where some of the European regulation has really moved a lot of the quality analysts that used to cover global small caps into the mid cap and the large cap space. So we look at companies sometimes that are only covered by between 2 and 4 analysts, sell-side analysts. They're often the juniors on the team. They often don't understand the dynamics of the industry or the company, and we think that's going to mean that global small caps continues to stay really inefficient and a great area to be an active stock picker.
Could you expand on 2 of your highest conviction positions?
Yeah, so we own Harvia in the portfolio, which is a Finnish sauna maker. It's only covered by a couple of Finnish analysts. It's expanding globally through M&A. It's got a US business, a German business, which it both acquired over the last 4 years. Gives it access to the US market, access to the Asian market. It's got great authenticity, and we think it's got a really great future ahead of it. The other one is Atcor, which is a niche leader in electrical infrastructure in the US, does electrical raceways, but also plastic conduits. We're seeing huge demand in the US. We're seeing they have the ability to pass inflation on. We see it as a hidden data center play, as a lot of their products, parts, fixtures and fittings are used in data centers which are being developed and built at an alarming rate in the US.
Simon Wood, thank you.